All right, gents, welcome back to our class. All right, there, welcome back to our chat. Welcome back. In this model, all right, so welcome back. All right, gents, so welcome back. All right, gents, so welcome back to our chat. All right, so welcome back to my screen. All right, so welcome back to my screen. So in our last module, we did speak about. All right, so welcome back to my screen. In our last module, we did speak about how to actually engage the chart hierarchy strategy, where I did explain that you go from the higher time frames all the way down. So I did teach how to engage each time frame for your maximum benefit, and then I did make mention of the fact, and I did make mention of the fact that that there are certain time frames for every single thing, that we don't use one time frame for everything, yeah, that every single time frame has its own use. So how do you maximize each of these time frame? That was what I spoke about in our last model. So now in this model, this is going to be an updated version of it. All right, so this is just gonna be so this model is just gonna be an updated model of the so this model is just gonna be an update from that previous model. Yeah. So I did speak about chart hierarchy last time we spoke, and then I made mention of the fact that there are different time frames for every single thing you want to do in the market. Every single time frame has its own benefit, from the monthly all the way down to the daily and then the 4 hour time frame. I did teach you how to go about those things. Yeah. So now again, just to pick up from where we stopped. So this is again the pound sterling versus the dollar. So this okay, all right. So just to pick up. All right, so just to pick up from where we stopped, so this is the pound sterling versus the dollar, yeah. So, and I did make mention of the fact that as far as this trend as far as we are actually still trading below this level somewhere around here, like so, this pair is still can still be tagged the bearish. All right. So now in this case here now, whenever you are faced with a challenge like this, so let's just go from the monthly time frame again and then see how things look. So we did use our trend lines, and we plotted our trend lines nicely, and we broke out of the trend line and then started to point to the upside. And as things look here, you can see that this is starting to go to the upper bound. All right, so now whenever you're faced with something like this, you need to also understand that, okay, after an impulsive drop here comes a pullback into at least half of. I think I'll speak about that one in other model. All right, so this is it, yeah. So this is just how the weekly time frame, sorry, the monthly time frame play looks like, yeah. Remember, initially what we did was mark out our turning points in the market, significant turning points in the market, and then from here to here, that's exactly how it looks, yeah. So this was the very top here, and then the very bottom at this point. So this is exactly how it looks, yeah. So now there are certain key things that you can do to maximize opportunities like this. That is, in the event that the market is not necessarily trending, it just goes into a range. How do you actually make the most of it? I'll teach you how to make the most of it. Yeah. Now in this case, yeah, whenever you're faced with something like this, you've seen that from the monthly time frame. What you by now you ought to know that the market moves from one level straight to the next level. Right? It goes from point A all the way to point B and vice versa. Now, as you can see here, and vice versa. Now, as you can see here, we've gone from point A to point B, and then we even exceeded point B all the way to point C. So I'll just mark this guy out, even though I think this would most likely come in useful in a couple of months and years from now. But let me just leave it there. So as far as this guy stands, this guy ought to go from point A to point B and then reverse to the upside, isn't he? Because I mean, this was where the market reversed from initially. So now instead, what then happened was that we did drop the point C and we avoided all the way back up to point B. Now, whenever you have a thing like this, whenever you're faced with a situation like this, now this is the high time frame P, and this strategy is applicable to each and every single time frame in the market. Now this is the higher time frame P. This strategy is applicable to each and every single time frame in the market. Yeah. Whenever you're faced with a thing like this, where you've seen a breakout, yeah, after breakout comes a retest and then possible continuation to the downside. But in this case, yeah, that did not happen. Instead, what happened was that we did have a breakout and then we folded all the way back up again. And then now, anytime you see stuff like this happen, best believe you need to go on the higher time frame first and first. This is the monthly time frame. Yeah, try and see if there are any trend lines you can use. Try and see if there are any trend lines you can plot. So go from the highest peak point here and then drag it all the way down. So clearly you can see that something was happening somewhere around here. Okay, something fishy was happening somewhere around here. Now after you get, because technically speaking, if the market gives you a breakout, like a false breakout and then a pullback again, it is always going to continue in this direction. I take it again. If the market gives you a breakout like this and then falls all the way back up, that is after giving you a new low, this is a lower low, it also give you a lower high somewhere around here, then continue to the downside. But if for any reason the market negates that principle and then it comes on here, gives you a new low and then falls all the way back up again and then starts giving you a new high, best believe this guy's going to rally from here to here, at least to here, at least to here, at least to 1.4. Do you understand what I mean? So technically speaking, you can see that that did that. But then you don't just go from here and here. You also have to ask yourself, okay, fine, is this market coming to test a trend line, or is there any trend line I can work with, or what is market trying to do at at this time? Because now I'm pretty sure if I pull up my fib tool, my Fibonacci tool, I can clearly see from swing high here all the way to swing low here. Let me just show you something real quick. Now, if you were the type who does not really like to pay attention to details, you would have gotten stopped out a few times here, because you would have been trying to sell this guy, right? Now, if you're the type that doesn't really like to pay attention to details, if you have watched the Fibonacci model very well, you would understand that after an impulsive stretch like this comes a correction at this midway. So now you have conflicting signals here, because in this case here, I mean, you've seen a breakout, you've seen a pullback. So this is technically a fake out, and after a fake out comes an exponential move in the opposite direction, because now once it's a fake out here, and the market, so because now once you have a fake out here and then the market for some reason fall all the way back in the upper bound, these are always going to rally at least to the next level, next significant level, and that happened. But then if you're the type that likes to use Fibonacci like I do, you have seen that, okay, fine, on other notes, this would have been a high and this would have been a low, and if you have plotted your fib very well, you can clearly see that that isn't the one. So you can clearly see that from here, swing high all the way to swing low here. So you would have clearly seen that from the swing high to the swing low, the market was in a Fibonacci play. It was in a Fibonacci play. So how do you do stuff like this? How do you cope with stuff like this? So here is how you cope with it. Now you can clearly see that on, again, this is the monthly time frame. This is quite significant. Yeah, this is the monthly time frame, and we are sat on a level. We are sat on a level here. The only way, listen, this level reverses price to the upside. Yeah, the only way that this market will that the only way that you would have executed this market or sold this guy, or so listen guys, this so listen guys, this market is sat on a level. This is the monthly time frame demand level. This is huge. So now and you guys remember from our chart hierarchy strategy that the higher the time frame, the more solid the trade play. All right, so now you clearly saw here for free that if this guy was poised to go down even lower, he had to break below this 1.20279 somewhere around here, like so. So if, for instance, you have Fibonacci from swing high to swing low, and then you're locked in here nicely at the 0.618 and the 0.5 region, which was where this was here. Best believe, again, best believe there are certain trades that you cannot take because they are too close to the reversal point. They are way too close to the reversal point, and you also need to study the last candlestick pattern. Like this is a morning star. this is the morning star. Yeah, this is a candlestick pattern that actually reverses prices. All right, so let me just double check something real quick and show you guys. um so this is now, so whenever you're faced with something like this, you need to understand that this is the morning star. Yeah, this is showing a buying pressure off of here. So now you have conflicting signals. So what do you now do? You wait. That's what you do. You wait. All right, remember we have a trend line coming from the very tippy top of this monthly time frame, so you wait for it to just get broken out. So in this case, what you do is you go with the direction. I take it again. Now whenever you're faced with something like this, the higher time frame levels always paint the overall narrative. On this monthly time frame, this level is significantly strong. It is solid. Forget it. This. So on this monthly time frame, yeah, this level is significantly strong. It poses a threat to every single thing that happens in the market. Forget that we actually blew through here. Listen and listen attentively. In the past, this level reversed price significantly to the tunes of thousands of pips. So best believe you do not want to rule out this level here. And even if it makes you break out here and you fail to hold below here, and then you now pull all the way back on, balanced out nicely, and now put in a morning star like so, your next concern now would be this trend line. You want to look at this trend line carefully. Yeah, you want to look at this trend line on the monthly time frame. So even whilst you're doing your lower time frame P, yeah, you're buying. I mean, it's cool to buy from here actually, because now in this case this is a fake out on the monthly time frame, guys. The fake out on the monthly time frame is huge, significant. We had that here. The market acted as if we had broken out of this downtrend, then folded all the way back down again. After that came an exponential drop to the downside. And whenever you're faced with something like this, that the market ought to go somewhere, and if for some reason it goes a different way, the move will be exponential. So you want to really pay attention to these things. Yeah, so now in this case, whenever you're faced with something like this, go with the flow of, see, this is it, you go with this flow here, with the flow of the fake out. All right, so now in this case the flow of the fake out is bullish. So you now want to mark out your level nicely like so. You can see that this is a demand level here, point 1, point 2, point 3. I said to you guys that the second pullback does not do much. It is always the top pullback that always sends price rallying. All right, it always sends price rallying. So whenever you're faced with something like this, just mark out your levels nicely and then say to yourself, okay fine, this is the demand level, and I'm pretty certain that once I scale down to the lower time frame, you see the thing clearly, guys. Do you see this is as clear as daylight. Yeah, so now these are the demand levels that you'd be working with. Yeah, this is demand 1, demand 2, right, demand 3. So now you now put this level somewhere around here, like so. You now say to yourself, okay fine, we have a trend line breaking somewhere around here. This is a breakout. Even whenever you have the market breakout on the monthly time frame, you now see 3 months breakout of there. That is huge. That is a contribution to the upside, definitely. And now this is a breakout and this is a pullback here. You now scale down to your weekly time frame and look at things clearly. All right, so let's see how things look on the weekly time frame. You now say, okay fine, so you can see how that demand level looks here. It held here nicely, held here, held here, held here. Best believe this was always going to send price rocketing through the roof. Yeah, so now you now come and pay again a close attention to the candlestick pattern forming around this counter trend, this trend line break here. Now this guy will be out of the way obviously, but kindly mark this point. You see the market broke out of this trend line here again after the retest. This was a breakout retest, and this was always going to be a continuation to the upside. Yeah, now if you're even long this pair, so this is a breakout here. This is a breakout. This is a pullback continuation to the. So this is a breakout of this trend line here. Pullback to that trend line, continuation to the upside here. Now what you need to do is mind where this guy is. Now this is out of the way. One, take it out of the way. So now this is a demand level, very solid demand level somewhere around here. Okay, so this is it. This is how it looks. So now on this note, you now say to yourself, okay, cool. All right, fine. We are out of this downward trend line here, and things seem to be pointing to the bullish side of things. Okay, fine. So this is what the weekly time frame looks like. So you now know for a fact that where this market reversed from here, where this market reverse from is where you want to put your take profit. All right, so you now come and mark out that level with your horizontal. Now this is where your minor level comes into play. Are you getting my point? This is where your minor level comes into play. Use them to guard your trades. These levels guard your trades. So you now place it here nicely like so. Place it there nicely like so. On the candle close, please, on the candle close. You now scale down to your daily time frame. Okay, scale down to your daily time frame and see how things look. Okay, fine. So the overall trend still goes with it. So the daily time frame trend still goes with the overall trend, which is good stuff. All right, good stuff. So adjust your level again here, like so. Okay, now, so you have two things. You can either execute on daily time frame, or you now scale down to the 4 hour time frame. I'm just walking you through the chart hierarchy again here. So this is how it looks on the 4 hour time frame. So on the 4 hour time frame, what you simply do is come on here like so, pull out your trend line. All right, come on here, slap it nicely. Okay, now on the break and close of this candlestick, if I broke out of here, okay, on the break and close here, this is where you want to enter. Now, occasionally you would have something like the market pull back into in back deeper here. Now, whenever this has happened, you need to understand that this is a demand level here. There are demand levels on every single time frame, be it the 1 minute time frame, there are demand levels. So you may not necessarily see it on hard time frame. Like now, once we scale back to the weekly time frame, it will not be as visible, yeah. But then if you come on 4 hour time frame, you have a lot more candlesticks here. So this is a demand level that the market just came to play with, and you can see that we bounce off of there. But now your entry on this trade will always be once this candlestick gets broken. Like once this trend line is broken, you see this bullish candlestick here. Let me just get rid of this guy. So you see this candlestick breakout here of this trend line here. This is where you enter, and your stops, to know that you put your stops well, is that when this pullback happens, it does not hit your stop. That's why, because the stops are somewhere below here. This is exactly how you trade this hierarchy strategy. Yeah, you put your stops at the least point of this structure, so that whatever thing the market wants to do here, you can do whatever thing it likes. You don't care, as far as it remains above your stop losses and above that demand level, is always going to go higher. Do you understand? Assuming you have entered this trade here and then put your stop inside of here, you get stopped up because you're thinking, oh, okay, this is a low, this is a high, and this is why I urge you guys, and this is why I urge you guys to always stick to the higher time frame P. Stick to the higher time frame P. You save yourself stress, save your account, and grow exponentially. Do you understand? Because now on the 4 hour time frame here, you could clearly enter from here, lower time frame period, and then be like, okay, fine, maybe. So because on the 1 hour time frame, you could enter from here and be like, okay, fine, my take profit is here, get a few 100% on there, and then you're bounced. But then what you tend to notice is that you miss out on the potential hundreds of pips that actually materialize along the way from here. So you see how it works. So on the monthly time, so you see on the monthly time frame down to the weekly time frame and the daily time frame, we're gonna have to make a very very decent use of the hierarchy, strategy. How you know what time frames to use for what. Yeah. So now you can see how it works. We've gone from the monthly time frame down to the 4 hour time frame. So you can even scale down to your 4 hour time frame and make your entries. But in all you do, make sure that you trade in the direction of the daily and the weekly time frame. All right. So because in this case now the trend has pretty much shifted from bearish to bullish in this case. So this is exactly how it looks here. So entries are here. Let me show you guys something real quick. Entries are here. Forget about the pip count. See, one of the reasons that's why people never really make money in the market is because they are focused on the pip count. Yeah. Forget about pip count. Execute your trades how it ought to be. And listen, you're holding to the overall TP here. And as I always say, yeah, your first entry does not make you the most money. Yeah, what you do after your first entry is what guarantees your risk reward. So the first entry is just to get yourself into the trade, into the move, into the wave. This is not where your most money comes in. In subsequent entries, how you scale in here, all these pullbacks here, this is exactly where you start to make your money. You feel me? So that's just how you capitalize on that strategy, and you can see how you lose on the 4 hour time frame. Entries will be below this low here. This is the low here. Put your stops a few pips below the low and allow the market do whatever thing it wants to do. Provided your stop losses are where they ought to be. Believe me, the market will always play around, eventually go in your favor. If you do your analysis right, that's exactly what you get. You feel me? So yeah, long story short, this is how it looks. This how it looks. So we're gonna head to back 1,432 pips, as you can see, like so. Assuming you were doing this on the 1 hour time, you would have entered here, taken 100 pips here, and then next thing you miss out on this whole move to the upside. Okay, so this is your clarion call to get on the wave of the swing trading. Come on to onto swing trading. So that is how it looks, guys. That's how it looks. So back on the weekly time frame. Now, when you execute this trade, yeah, I've got to mention them. When you execute this trade here, so when you have your entry somewhere around here like so, make sure you hold to the overall TP of the weekly time frame. Do not be short-sighted and limit yourself. Target the overall weekly time frame high, which is here, and you can see the market is just moving sweetly all the way to that. But of course, you're gonna have pullbacks here and there. But best believe, at least you're not short-sighted. You're not leaving all this money here. All right, so there you have huge money here up for grabs. Make sure you make every single one of them. That's exactly what I teach you. Yeah, and if you're the type who likes to go on the 1 hour time frame and even execute all the best, just make sure that you put your stops where they ought to be and ride this wave all the way to the upside. That's exactly how we move. All right, that's exactly how it works. You can see how the chart hierarchy has helped you avoid losing trades and also capitalize on all these trades. Yeah, so that is how it works. So I don't think there's any other thing to touch on this chart hierarchy strategy. It's just so what the old strategy entails is that the higher the time frame, the more authentic the setup, right? The higher the time frame, the more authentic your setup. So that's just how it works, yeah. So we've covered the monthly to the weekly to the daily and then the 4 hour time frame. You now know exactly what to look out for because now on the monthly time frame again, I repeat, we look for directional buyers, trend lines, and then also the kind of candlestick pattern that is forming that it so again I repeat, on the monthly time frame, we look out for the directional bias. We pull out some trend lines and then we look out for candlestick patterns. And then on the weekly time frame, we come in and then work with our levels, our chart patterns. Look out for reversals here and there. And then on the daily time frame, we find the trend that is within that weekly time frame trend, and then we now execute on the 4 hour time frame. Right, this is exactly how it works, guys. This is simple, straightforward, and no iota of. All right, so this is how so that's just how it works, guys. Simple and straightforward.